There we go. Perfect. We are open now. So welcome everybody. Thanks for being here. Just as we're getting in and getting everybody sorted out, we're right at 7 o'clock. We're gonna give it a little bit to let some more people in, but for the people that just have been waiting, can you let us know in the chat that you can see us and you can hear us and it all works out that way too, just to make sure there's no issues on our end. And I'll let Ryan say hi too.
Hey guys, how's everybody doing? I see a great group here tonight. For those of you that are joining us right here at 7, thank you so much for joining us this evening. As Andy mentioned, it looks like everybody can hear us fine, which is fantastic. We are going to use the chat function as well pretty regularly tonight. We'll keep posting this for the first 5 minutes or so, just so that everybody knows that we're going to use the chat function for our questions tonight. So if you do have any questions as we go along, we do want to make sure that we get your questions answered quickly and efficiently. And what we typically find is that if you do have any questions at all, there's usually 3 or 4 other people that are wondering the same question. So don't be afraid to use that chat function as we go along to communicate with us and ask any questions that you do have all the way through the presentation.
Yeah, perfect. Yeah, I see a question already. Yeah, what's the duration of the call? So our goal is to wrap up the main portion of all this by, I'm going to try and get us done by 8 o'clock, maybe just a little after 8. So about an hour to go through all the stuff in here. But we are going to hang out for a little while afterwards for more questions we either missed or you have. Talk about random things about the market, whatever we need, we stick around for as long as you want us here. And another thing is for everybody that's in here for now, if you have to leave or you gotta jump out or something happens, this whole thing is being recorded. I am going to send you guys out a recording of it tomorrow. It'll be in an email, so that way, again, if you want to recap anything, miss something, or have to step out, you will get a full copy of this all. And this is just, again, the beginning steps and the things to look for when you first start buying your home. There's so much that goes into this, so we're here just to get you kind of an initial idea. But if you have any other questions or want to know if you're close or ready to it, the biggest thing I want to point out here, I'll put it in here too. The link I put in the chat here is a booking link. Now, what we do is we go through this all. If you have more questions on a personal level, maybe more situated for you, book a call with us. That way, your first initial call, we're going to have time set aside for you individually. That way, and then once we have that first talk, then you have our numbers. You can call or text us anytime, but this one is just so we can set up that first initial call and we have time all place. So I'm going to keep putting that link in as we go, so you're not going to miss it, right? But yeah, utilize the chat as much as you can. There is a ton of information that I'm going to be talking through. Ryan and I are going to be talking through a lot of stuff at a fairly fast pace to get to 8 o'clock. So throw questions in there as much as you can. We're happy to get through them all if we can during it and then after as well. So so far we got a pretty good group on here already. We're a little after 7, so I'm going to start getting into this here. As people come in and out, it's okay. We're going to keep rolling here, but again, I want to say thank you for everybody again for showing up tonight. We really appreciate having you here. We hope you're going to get a lot of value out of this, whether you're ready to look into something right away or in the future. This is going to give you the basics of what you need to start with and things that we can help you with. So that's a good question. A lot of this is going to be focused on the finance part of things at the start. Then we do dive into a little bit of real estate stuff, but because the whole buying process is a lot to do, I just kind of point out some basic things. And if you want to know more, 100% book a call with us or give me a call. I'm happy to go over a lot more things afterwards. It's just we only have so much time on this call. So again, thank you guys. For everybody that signed up for this, you did get a message that says we were going to give you a copy of the book and a condensed buyer's guide. That is true. This is the book. You're going to get a free copy of it in the email I'm sending out tomorrow with the booking link and the recording of this. You'll get a copy of this. It's a digital version, so you can read it on your phone, a tablet, your computer, whatever. So again, that's just a thanks for being a part of this. We're happy to have you here. So when it comes to buying a home now, I know that the last few years, it's been a lot going on in the market, a lot of stuff in the media about it, and it can be, a little daunting, a little stressful. And so the goal for us, I myself am a realtor, Ryan is a mortgage broker, but in our position, we're here to help you, show you that there are ways in it. We've helped many first-time buyers in this market. There's definitely possible to get your foot into the door, and we can walk you through the entire steps here. So if you're feeling any of these, normal. We've all felt that way, especially for a big purchase like this. It's a huge thing, so we want to make sure you're comfortable, you know exactly what's going on, and things that you can avoid that would be major problems in the future. Okay, so that's the whole point of this all. Before we get into that, though, at least we should tell you who we are so you know that we're actually qualified to talk to you about these sort of things. Myself, I'm Andy Goddard. I'm a realtor here, as mentioned, in Saskatoon area. I'm with eXp Realty. We are a cloud-based brokerage. I don't have a physical office, but if anybody wants to meet on a one-on-one basis and talk more, I'm happy to meet either at any place in the city, coffee shops, whatever. If you want to talk with both Ryan and myself at the same time, we can book that as well. I service Saskatoon and surrounding areas, so I am licensed in all of Saskatchewan, but I kind of stick to the main hub of Saskatoon. I live out here in Warman with my wife and two kids. We've called Warman home since 2016, but I am born and raised in Saskatchewan in a small farming community of Maple Creek. But I decided to call Saskatoon or Warman home because I got a lot of family here, and I love helping other people find places to live here. So that's a little bit about me. I've been doing this for just about 4 years now. It's been really fun. I enjoy it. I think it's great. I've met Ryan here. He's been amazing to be a part of this all too. So what I'm going to do here is I'm going to put in another link here. So that Linktree address is all my social media. So Facebook, Instagram, both business and personal. So you can find out more about who I am if you want to. It's all right there for you. But when it does come to real estate, now majority of first-time buyers do not have the cash to buy a house, right? Full cash. They need financing. With real estate, you need a team that's going to help you with both buying the house, looking for the house, searching for the right one, and somebody who's going to help you get that financing and a good team that's going to help you with it. I have been lucky enough to find my partner Ryan here. He is with TMG, the mortgage group. We've been doing this for the last few years now. It's been great. And to have this team on your side is amazing. So I'm going to hand it over to Ryan. He's going to do a little bit of intro for himself. So take it away.
Perfect. Well, thank you so much, Andy. Yes, that beautiful bald head on there, that is me. My name is Ryan. I work with TMG, the mortgage group. I'm based here in Saskatoon. We do have an office downtown in Saskatoon, right across from City Hospital. As Andy mentioned, we are both licensed here in Saskatchewan. So just because we are based in Saskatoon doesn't mean that we can't help you with properties and financing all across the province. So if you are looking for something that is in Saskatoon or surrounding area, or even something down in Regina, North Battleford, Swift Current, any of those centers, even something rural, please let us know. We are fully licensed across the province, and we can absolutely help you with all your needs across the province as well. I've been in the mortgage industry here in Saskatoon, Saskatchewan for over 20 years. TMG is one of the premier brokerages here in Saskatchewan as well. So I am proud to represent TMG, the mortgage group. I've lived in Saskatoon with my beautiful wife. It will be 30 years that I've been married here this year, and my two wonderful boys. We call Saskatoon home and have for our lifetime. Couple of things that I did want to point out. We will be really using the chat function tonight as well. So for those of you, if you do have any questions at all, we've been throwing a lot of stuff on the chat for you already, but please feel free to use that chat function for any questions that you do have. We've had some excellent questions come through so far. So please throw any of your questions into that chat function for us. As Andy's talking or I'm talking, the other one will be following that chat group for us to make sure that questions do get answered quickly and efficiently. What I typically find is if you have the courage to ask that question or thinking that question, there's usually 5 or 6 others that do have that same question as well. And as Andy mentioned, we are going to post the booking link throughout the presentation tonight. What this does, everything that we're going to talk about tonight is fairly high level. and every individual situation that you're going to have specifically really will focus down on your individual needs and situations. So booking that one-on-one call with us really lets us kind of dive in, learn about you and your family and your needs and what's really, really important to you, so that we can tailor not only the financing side with the mortgage, but also the home buying side, making sure that we do find that perfect property for you and your family to fit your needs. So click on that booking link to get that one-on-one meeting. We already had a question. Is there a cost to book the meeting? Absolutely not. We love to talk to you, and we're here to help you all the way through that process. All right, let's get started. I'm going to turn it back over to Andy to get the ball rolling for us.
Awesome. Thanks, Ryan. I do appreciate that. That was a good question. Yeah. Um, Really when it comes to asking us questions, getting a call with us, right? We don't charge by calls or anything like that, right? You want to talk real estate, I'm happy to talk real estate. I'm never going to charge you a fee to talk to you and give you advice. That's just not what we do. So don't ever hesitate to reach out for more questions after this, during this, right? Booking that call with us. You're never going to get charged something, okay? We don't run our businesses like that. So yeah, so hopefully you guys are going to get a lot of info. We are going to start jumping into the main bulk of it now. The main part is going to be a lot about mortgages. And as Ryan mentioned, this isn't a one size or one shoe fits all kind of thing. Everybody is very individualized. So just because what I say in here and you think, well, that doesn't really work for me, there may be ways we can work with you. We can talk to you about your specific situation, say, okay, that's easy. We'll do this or this and help you out, either get you something right away or at least at the minimum, show you what you need to do to get there as fast as possible, right? And work with you that way. So it's never a no, it's just maybe not right now, but this, okay? So just keep that in mind. But what I'm going to do here is I want to talk about and show you the entire buying process, kind of a very condensed version. Just this slide alone, I could probably spend hours on because there's so much that goes into it. But this is essentially what we do from start to finish. All right. So very first thing, right? I always say learn everything you can about buying a home, right? Get the right advice, know the right people, right? That's why we put this on, is to help get that part of the way. So the next major step when it comes to buying a home, especially if you do not have cash, is financing. Get that pre-approval. The reason why it's so important is for two reasons. Number one, in this low inventory competitive market, we need to be able to write competitive offers, and knowing exactly how much you can purchase is a huge deciding factor. We know, and then it also helps us knowing what your range of affordability is so we can shop within your budget, right? I've had so many people in the past, now that we start doing this more, in the past, I've had people just randomly looking at houses they want, right? You look at that $500,000 house or 550 out in Brighton and Aspen Ridge. And of course, everybody wants those new builds, right? But they look at these and then they go and get a pre-approval and maybe they're hitting the, 400, 450. That $100,000 drop is a major difference. So we want to make sure we're shopping within your range before we get any high expectations, right? So we want to eliminate that, make this a fun process, and shop within that budget. These are going to be a first time house, so most of the time it's going to be that starter house. So we just got to work within that, all right? But so once we get that pre-approval locked in, we get that number, we do jump on the market and we look to find the houses and the properties that are available in your budget and for what you need for you and your family. Whether you want a condo, a duplex, a fully detached house, a new build, whatever that may be. We tailor your search individually to you. I look off market as much as I can too. That way, if there isn't anything on market, I try and find something that's off market as well. So we're always searching for you as we do this. And then so once we look at places, we get a good view of them. We tour some places, and you find the one you want. We submit an offer. As much as I can, I will do my absolute best to negotiate the purchase price for you with a low inventory market that is getting a little bit more difficult, especially if there's multiple offers. But any way that I can help save money and give you a better deal, that's 100% my job. Ryan and I work for you as the buyer, not for the seller. So we want to get the best deal as possible and protect your money, right? So once we offer and negotiate and we come to an accepted offer, then we go into what's called a condition period. So you're going to hear things called conditionally sold. So that's when a house has an accepted offer on it. It's not currently really being marketed anymore because they have an accepted offer. We just have to make sure that the house is, okay for you to buy. So that's things like make sure the financing gets fully approved, make sure the home inspection is done. If you're buying a condo, make sure that the condo documents have been reviewed and are satisfied to you. And if you're happy with all that and the house is a sound investment still, then you remove conditions. It becomes a firm sale. And then all that's left is just wait till possession date, whether that's a couple weeks after, a month after, a few months after, depending on if there's tenants or owners in there or a vacant property. But while we're waiting for that, you sign with a lawyer, transfer all the titles into your name, get the funds sent over, and then we meet at possession day at your new home. We do a really cool, thorough walkthrough, make sure that everything in the house is the same as it was when we first looked at it. Everything's working properly, there's no issues. And as long as that's all good, then we walk away and you are now proud new homeowner. So that's essentially the steps. A really, really, really condensed version. There's just so much that goes in between that. Again, we don't have time for that. But if you want to know more, 100% reach out to us. I'll walk you through the buying process. But that's kind of each person's individual. The house searching is different for everybody. So it's kind of going to be tailored towards you. But what we do is we do our best to find you the absolute best property, point out any flaws that there could be in a place, and make sure you know what you're looking for. So then, that being said, I'm going to jump into the mortgage process. That's the big one. That's the biggest key. Like I mentioned, that's step number pretty much one. That's going to be the biggest part about getting into a house is this mortgage approval. Okay, so again, just to that disclaimer again, make sure that you don't just think this is the only way to work. There are ways that we can make a mortgage approval happen. This is just the general outline and the guideline, right? This is just what most people have to go through, but there are steps to help make something work for you, okay? So anybody that is new to Canada, a lot of this stuff here may not work for you because you're new and you're fresh to Canada. You don't have history built up here. That's okay. There is a new to Canada program that's in place. Ryan's going to talk about that a little bit. So just keep that in mind when I'm going through this here. Okay, so there's three things that you need to have work together to make a mortgage happen. So these are the three things, they're the pillars. Without one of them, it doesn't work, okay? First thing is credit. That's always going to be important when you're borrowing money from a lender. They want to know, do you have good credit? Credit score is one of the things, right? 620 to 650 for a credit score is usually the minimum. Anything above that, perfect. Anything below that, then we're kind of looking at different mortgage options, which we can get into on another time, but it's usually kind of like a B mortgage. It's more higher interest rates, higher down payments, things like that. So we want to have good credit. We want to have, make sure that you don't have any collections or any debt consolidation happening, no bankruptcy in the last couple of years, right? They want to make sure that when they're going to lend you this large amount of money that you're able to pay it back and you've got good standing credit. Again, new to Canada, we have a program to help boost that for you guys. Income is another big one, right? They need to know how much can you afford to pay us back, and they're not going to use 100% of your income just because they know that you still have to buy, groceries and gas, and you need to pay the utility bills, right? So they want to make sure to know how much you have and work within that budget too. Typically, they want to see us. They want to see about 2 years worth of tax returns to see how much you make over a 2 year span. If you work a salary position, that one we can get a letter from your employer that states how much you make over either monthly or yearly, and that's pretty much guaranteed. So we could use that. If you work an hourly pay, same idea. We need that too. So those are the things they're going to look for. If you have children, they can use child tax benefits as income as well, right? So there's things we can add to it to help boost your income. The other disclaimer, though, when it comes to income now, usually when it goes to buying your first house, we want to see a salary position, hourly position, something with guaranteed paying hours. We've had this come up a lot more recently. If you're working at Skip the Dishes, Uber, things like that, that you're kind of setting your own hours and pay, lenders can't use that until you have that full 2 year history of it, just because there's no guaranteed hours, okay? So just keep that in mind. If you are doing that, you do need a large history. It's just like self-employment, right? You have your own business, you're paying yourself. You need a full 2 years worth of that. So just keep that in mind when you are, if you're working at any of those jobs, okay? And now for the big one is a down payment. That's the one that is really big. A lot of people ask about this. So down payment for buying your first home here or buying your main property, 5% is the minimum down payment required of the purchase price. Okay, so $300,000 house, you need $15,000 for a down payment. There is four ways, well, three ways. There is a fourth way to help get a down payment. Okay, so the first way is the most common one, which is your own savings, right? That's always going to be the most common one. The second way is we do have a first-time home buyer program. It is an RRSP program. So if you do have RRSPs savings, you can withdraw up to 35,000 per person. So if you and a spouse have it, you can withdraw 35,000 per person to use towards a down payment. If you are thinking of doing that, please reach out to your provider. Let them know you're doing it. Make sure that you are able to use it that way, and they'll tell you what you have to do and the payback options when it comes to doing that, right? So we did have somebody who was using it, but it didn't work out, and so we want to make sure that you find out beforehand if that's what you're going to use. The third way is what we call the bank of mom and dad. So you can get a gift of a down payment from an immediate family member. So grandparents, brother, sister, parents, right? You can get a letter written from them that's saying this is a gift. They gift you the down payment. You can use that towards your down payment if you need a little extra, right? That is definitely possible. The new thing now is that even anybody new to Canada can also use that as well, which is good news. And then the fourth way is more inclusive. So if anybody on here is part of the Métis Society of Saskatchewan, the Métis have a first-time homebuyers grant where they give you up to $15,000 for a down payment, and they give a little bit for closing costs as well. So like for lawyer fees and things like that. So if you are part of the Métis Society, you can reach out to them. They will give you the down payment as long as you can still be approved for a mortgage. There are some restrictions in there, so if you want more info, reach out to me. Happy to give you all that info for you. So those are typically the things that we need. All those three things have to work together. So like if your income and credit combined can approve you to, let's say, 450,000, but your down payment is capped at 20,000, well, then you're not going to be approved for 450,000. You're only going to be approved for how much your down payment lets you be approved for. Okay, that's why these things have to work together, right? So those are the things. Anybody new to Canada, Ryan's going to touch on this. Anybody who's new to Canada wanting to do this, but they have funds across seas or overseas where you've come from, and you want to use that money here to buy a house, you can for sure use it. You just need to have it all over here in a Canadian bank account, sitting here in full for 90 days straight. They need to see a 3-month history of it being here in Canada before you can use it. So if you're thinking of using it, best thing is to do to get it over here as quick as you can, get those 90 days counting for you. So that's the big thing. So the thing with approvals is once you have that pre-approval, they are underwritten. So they do go to an underwriter. They review your income, they review your credit, they review that down payment source. But the thing about them is they are reliable and they tell you that maximum qualifying amount. So again, like I mentioned earlier, we need this to write a competitive offer. It tells us exactly how much we can shop for, right? Those are the main things. So when we write an offer to purchase on a property, and even if it's a multiple offer situation, and I get a message from the other agent who's selling the house and they say, hey, are your people pre-approved? I can confidently tell them, yes, they are. We're able to buy this place. If I say, well, no, they're not pre-approved yet, they're not even going to look at you. They're going to go to the next person and just totally ignore that because it's too competitive of a market to worry about somebody because they don't know if you're able to buy the place or not. So that's why this is so important. So the next little bit, oh yeah, sorry, the last little thing here for me, and I'm going to hand it off to Ryan here, is co-signers. So we've had this come up a little bit lately. If you're unable to get a mortgage, either maybe your credit's a little too low, boost of income or boost of down payment, you can use an immediate family member to co-sign for you. They essentially help you buy the property. So as long as they are, again, immediate, so grandparents, parents, brother, sister, right? They can co-sign for you. Their name is going to be on the mortgage or on the title as well, right? They're committed to being a co-signer for as long as you can't be approved for the mortgage on your own. But once you can be, you can go and get them removed from the title and then it's yours again. So there is no extra cost of using a co-signer when you go to purchase a property. The only extra costs come from if you want to get them off the title of your home. The last I checked, it's about $700 or $800 from a lawyer to do that. So some people choose not to take them off until they go to sell the property. And then once it's sold, they can go buy their next one without the cosigner. And really the only thing is if there's a cosigner on there, they have to be able to, when you go to sell the place or anything like that, they are part of the process. They need to sign off just like they are an owner of the property. So that's a little bit, but if you're thinking you need a cosigner, we've done it before, we've done it a few times. It's definitely helpful to get your first home. Reach out and we can walk you through that. So that's a bit of that's pretty much a pre-approval in a nutshell. Again, like I said, this isn't a one size fits all. This is just the basics. There's so much that we can work with and around with each individual person, right? Just because you work at the exact same job as your neighbor and you make the same amount of money and you make the same hours, his approval amount could be a lot different than your approval amount, and they could be a whole different scenario. So this is just basic guidelines, okay? That's all this is. So what I'm going to do now is there's quite some fantastic mortgage updates coming for first-time buyers, and I'm going to pass that off to Ryan because he's the mortgage guy and he should fill us in on this, and then he's going to talk about the new to Canada program. So Ryan, I'm going to let you take this away on the new mortgage stuff.
Perfect. Well, thank you so much, Andy. Yeah, we've had some really cool updates coming at the end of 2024 here from the federal government. So just to kind of recap, typically in Canada, the maximum mortgages, the maximum amortization, which is the full lifespan of a mortgage that we could offer with anything through CMHC or Sagen, which are mortgage insurers that are required for any down payment under 20%, would be 25 years maximum, and 30 years if if we didn't have CMHC involved. Now, what they have made the changes for from the federal government, and these are for CMHC fully insured mortgages. I'll kind of back up. You see December 15th on there. So what we have right now as the change as of August 1st of 2024 is that if we did have a first-time home buyer that was buying a brand new construction home, that those were the only ones that could get 30-year AMs, and that went into effect as of August 1st. Now, what you're probably thinking is, what qualifies me as a first-time home buyer? So I'll just kind of touch on that for a minute. What qualifies you as a first-time home buyer here in Canada is that if you or your spouse have not owned a home for this calendar year plus the previous 4 years, and that is a home in Canada, that is not a home worldwide, that is a home in Canada. So if you and your spouse, or you or your spouse, have not owned or co-owned a home in Canada for the last 4 years, you are considered a first-time home buyer. So as of August 1st, if you were a first-time home buyer that was buying a brand newly constructed home, you got to get a 30-year amortization option. Now, what the 30-year amortization option does is it spreads all your payments for the lifetime of your mortgage out over 30 years instead of 25. So what that means typically is that you would have a lower payment for the lifetime of your mortgage, but it would go 5 years longer. What that typically does with that lower payment is it allows your qualification income to go a little further. So usually your income would allow you to buy a slightly larger house. Typically, it can be in about the $20,000 range. That would give us that little bump. So that 30-year amortization option was a great new introduction from the government of Canada. Now we've had a further update here in October that, as you can see on the screen, that states that any new applications as of December 15th, 2024, if you are a first-time home buyer or buying a newly constructed home, that you get a 30-year amortization option. So what that means is First-time home buyers, regardless of what you're buying, you have the option to get a 30-year amortization. So that's going to help you, if you want to shrink down those payments a little bit, knowing you're going to pay for that mortgage a little bit longer, that's an option. It might give you a little bit more buying power. Or, of course, the bottom of that slide, anybody buying a new construction. So that is a brand new home that is newly constructed by a builder. So if you're buying a home that has not been lived in before, that is a brand new build. Everybody that is buying one of those also has the option to get into a 30-year amortization. Now, keep in mind, you don't have to take the 30-year amortization. It's just an option. You might need it. Your qualification might be really tight. So that might give you an option to maybe buy a slightly larger home. We do have clients that are going through that exact situation right now. They bought right to the top of the range, and we did need to stretch those amortizations out to lower their payments down a little bit to help them qualify for that larger mortgage. But you don't have to take it. If you want to go with the shorter lifespan, you'll typically pay less interest over the shorter lifespan, but it does mean your payments are a little bit higher. So there's some great updates that have come from the government of Canada in the last few months, and we're constantly pushing the government to really help out homeowners, especially those first-time home buyers. And our new to Canada first-time home buyers as well. Those absolutely qualify. We know that there are lots on that call today, and that's kind of where we're going to segue into is that new to Canada segment. So some great changes on the first time home buyer amortization side, but we're also going to see how we can really help with the new to Canada program as well. And our new to Canada borrowers are also considered first time home buyers and do have those benefits that are going to come in. They're considered first time home buyers. They do have those 30-year amortization options that the government of Canada has put out. Okay, so jumping over, we see the new to Canada slide here. So one of the biggest segments of the first-time homebuyer market here in Canada, and one of the largest drivers of housing growth in Canada, is our new friends that have recently immigrated to Canada, and more specifically into Saskatoon and Saskatchewan over the last few years. Now, typically what we see is about 1 million to 1.5 million people coming into Canada each year. And that has just grown steadily over, say, the last 5-10 years. We do have some pretty open borders. We've seen a lot of new immigrant friends coming in from countries all over the world. So, if that does open up some doors for you, and that is the category that you do fall into, we do have some great programs that the government and our banks have put into effect to really help our new immigrant friends coming into Canada get into housing right away. Okay, now our government and mortgage lenders do realize this, so they have put special programs into our new to Canada guidelines to really work with you. They realize that you're likely going to be fairly new to a job, you're fairly new to the country, you haven't established a lot of Canadian credit yet, and they do have ways that we can still qualify you, and ways that we can look to establish credit patterns and realize that you are a good credit risk. We do have some things that we can go through and help you qualify with those programs. So, most people think, oh, I've only been in Canada for a couple of years. Do I qualify yet? The answer is probably yes. So, as Andy mentioned, we do have that booking link. We'd love to hear from you. We'd love to really go through your situation and help you out. Okay. The typical new to Canada borrower does really has emigrated to Canada within the last 5 years. What they kind of stipulate there is usually when you're fairly new to Canada within that last 5 years, you're gonna be fairly new to your job. You're gonna be fairly new to credit. Once you've really been here that 5 year mark, you typically are fairly established in your job. You've got 5 years worth of credit established. And once you kind of have that credit established, that income established, then you really kind of move out of the new to Canada program into a normal borrower program. So you wouldn't be looked at like a new to Canada borrower. You would just be a regular standard borrower. So this is really for people that are fairly new within that last 5 years. The applicant typically has to be on a permanent residency status or a valid work permit. So when you're coming into Canada, usually The typical statuses you get, people have come here on a permanent residency status, and you would have a PR card and a PR number. You may come here on a valid work permit that does have an expiry on it. And you've come to Canada to work. The big thing on the valid work permits is make sure that you do have at least 183 days left on it from the time that you're going to buy that house. So make sure there is some time left on your valid work permit to make that valid and usable. Now, the one that doesn't work so far, unfortunately, that we don't have an option for is the student visa. So people that are here on a student visa don't qualify yet under these new to Canada programs. You do have to be a PR or you do have to have your valid work permit. Okay. Now, when looking at employment and income, we've got a few questions on that already tonight. Really, we look at their income like we do at any other borrower. So we're going to look at, and check to see, are you on, a full-time status? Are you permanent at your job? Are you on a contract? Are you casual? Do you get guaranteed hours? So if you're full-time, do you get 40 or 37 and a half hours guaranteed by your employer at a certain wage? If you're part-time, you're guaranteed maybe 24 or 32 hours at a standard wage. Or if you're casual, are you maybe not guaranteed any hours at all? So typically what we can use as lenders is we can use what you're guaranteed to get. Lots of people say, oh, my job is so busy, I work 45 hours a week, and then we get their income back and it shows they're only guaranteed 20. They do work more, but it does fluctuate when it's in and out of their busy season. Unfortunately, we can only use what you're guaranteed. Okay, so if you're working 45 but you're only guaranteed 20, we can only use that 20 for the first little while to qualify that income. Once you've been at your job for 2 years or longer, what we can actually do is use a 2-year history of your income if you are on that casual. So being on casual doesn't automatically take you out of being a qualified income. It just means we have to have some more stability to that job, that 2-year history. So the timeline, I get asked a lot, how long do I have to be at my job? Most lenders like to see at least there past your probation period, usually that 3-month mark. But we have seen, if you're transferring from one job to another, same line of work, same job, you just moving for more money. Usually that probation period isn't applicable. So it's really situation dependent. Lots of times they tell us about 3 months, but it really depends on the situation of your job. If it's your first job, probably 3 months would be the standard. If you're moving from one company to another, same line of work, we probably will be able to do that right away. So it really depends on each individual situation. One key highlight, I do want to make sure that we qualify that the applicants do have to be paying income tax in Canada to qualify. So there can't be income from another country. Say my spouse works, back home. Can I use this income? Unfortunately, not. We do need income that is taxed here in Canada to qualify. Okay, that is one of the biggest questions we get, especially with new to Canada borrowers, is I'm here with the kids, but my husband is still in our country of origin. Can I use my husband's income to help us qualify? Unfortunately, we can't. Not until he's here working in Canada and has his income taxes deducted at the source. In Canada here. Okay. Something else to really watch out for, people that are on maybe a contract that is expiring. So lots of times IT companies will bring people over here to work on a project, and they will be on a 1 year or a 9-month contract, and then that contract is done. So that is not a long-term stable income. We do need any sort of a contract income. Again, you got to have a little more stability and have that 2-year record. So watch out for expiring contracts. Also watch out for people that are self-employed. Again, if you're coming new to Canada, you're starting up a business, there's a lot of risk in that, right? So we want to make sure that you do have a good track record of that business operating well for at least that 2 years. So what we need with anybody that is self-employed, obviously that is a Canadian business, you're running that business in Canada, and that you do have at least 2 years worth of your tax documents, your T1 generals and your notices of assessment, 2 years of that, and we can use your self-employed income going forward. Okay. The next step we want to talk about is really the credit side. Okay, so this is slide number 2 here on the credit for the New to Canada program. As mentioned, the New to Canada program does take into account that most borrowers that are coming to the country fairly newly will not have a lot of established credit yet. However, we do still need to ensure that we have things that we can look at, that they are still a good credit risk. We can't say that, if you come here, there's nothing we've looked at, there's no credit bureau, that we're just going to carte blanche give you a mortgage. We do still need to find ways to ensure to the banks and the lenders that we go to that you are a good credit risk. So they do kind of establish different things that we can look at, with your finances to establish some sort of a credit risk program. So if you have immigrated to Canada in with under 12 months, usually they like to see a minimum of 6 months coming in that 6 to 12 month span. Most of the lenders and insurers want to see 10% down payment just to sway that risk a little bit. And they do want some credit that they can look at to establish. If you've got a credit bureau, that's great. If you got some sort of a history on that credit bureau is great. Usually they like to see at least 12 months, at least 1 year worth of credit on that bureau. But they also look at other things too. So as you can see on the screen, we can look at your bank statements to make sure that you've handled your accounts well. So what they're going to do is look at your last 6 months worth of bank statements on your primary account and check things just to make sure that your pay is coming in nice and steady, making sure that if there are any rental payments that are going out, that those go out nice and steady. There are no missed payments or non-sufficient funds charges on your bank statements, things like that. So if all your bank statements are handled well, typically for 6 months, that is credit support to help clients out with a 10% down payment. So that's kind of one of the ways that we can work around somebody that may not have a credit bureau established. Okay. Once you've been in Canada for over 12 months, it really kind of opens our doors up again. So, what we typically see at the 12-month mark is that you can go back typically to that 5% down payment. Normally, 5% down payment is the standard here in Canada. And what they would do to establish your credit is they would look at things like a 12-month history of any sort of a bill that you might have. So if you have a power bill that you pay your rental, if you have an SGI car plate, that would work for 12 months. If you pay a cell phone, if you've had a cell phone for 12 months, if you if you pay an energy bill or a cable bill, any of those structured payments for a history of 12 months, as long as those payments are all made on time, we can use that as supporting credit for your credit bureau. So they would use that 12 months from one of your bill payments, and they would typically look at your rental payment history. So you obviously are coming into Canada. If you are renting a home, what they would do is look at your rental payment history. We'd get a letter from your landlord saying all your payments have been made on time. We would have a look at your bank statements to see that the funds had gone out from your bank account to your landlord to pay your rent on time. And there we go. We've got two good ways of establishing a credit for a client that might not have a lot on their credit bureau. So just because you are fairly new to Canada, just because you might not have a lot of credit cards, lines of credit, and things like that on your credit bureau yet, we do have options for you that we can really show the lender that you are still a great credit risk. Okay. Now, the last thing that we do want to talk about here, we've talked about the income. As Andy mentioned, the 3 pillars are typically your income, your down payment, and your credit. So we have covered off the income side. We have covered off the credit side. And now let's finish up with the down payment side. Okay, we've got a lot of great questions on the down payment. As I've mentioned, typically if you're here less than 3 months, most of the lenders insurers do want a little bit more down payment. So most of them do want to see that 10% down payment. We have had situations where they do have, if you're coming from a country that has an international credit bureau, like if you're coming from the United States or from the UK, they do have Equifax credit bureaus that are very readily available. We can typically use those credit bureaus to use your established credit and get you into a 5% down payment. If you have no other credit established, typically that's 6 to 12 months, they do want to see that 10% down payment. Okay. And as I mentioned, if you have been in Canada for 12 months or longer, we can bump that right back down to the 5%. We just do need to get that either supported credit on the bureau or the alternative credit options that I did talk about. Now, one of the biggest questions I do get is, what can I use for down payment? What qualifies as a standard down payment? So down payment can come from typically the biggest one is from people's savings. So as your job, your employment, as your employer pays you, each couple of weeks or each month, and you start to build that savings up. So what the bank typically does is they look at your bank account history for 3 months, so a minimum of 3 months, 90 days, and they watch to see that you've saved up that money in a standard fashion. And that's typically the biggest one that everybody uses is savings. Okay. But one that most people don't realize is an option that we can also use is a gift from an immediate family member, also qualifies as a standard down payment. Now, keep in mind, it does have to be from an immediate family member of yours. Now, what defines an immediate family member? As you can see on the screen, a mother, father, a grandparent, or a child is what qualifies as immediate family member. So it cannot come from Uncle Joe. It cannot come from somebody that you consider a brother. He's, a really good friend. He has to be blood related to you. He can't be a brother or an uncle, or a guy that you you came over with, that's been a friend of your dad's forever. Those don't qualify. It does have to be an immediate family member. So please take note of that as well. The sale of an existing home. So, I mean, if you're bringing, maybe selling a property that you have already in Canada, and you're looking to move forward, that also qualifies. Now, one of the biggest questions I do get here is, I brought funds over, or I do have funds available in my country of origin. How do we move those funds over? Okay, do those qualify? Yes, absolutely. We can use those funds. They are your money. We can absolutely move them over. The biggest thing is we do have to track the money. So we are required by Canadian law to track those funds for a minimum of 3 months, wherever they come from. So, if you've moved them from your country of origin, a month ago, we will have to get your bank statements from your country of origin to show the funds were readily available and saved in your country of origin. And then we will track it all the way through. So say you moved it from your country of origin into your bank account here in Canada a month ago, we will get the 3 month statements from your country of origin. We will also get your 3 month statements for your new account here in Canada to show not only the savings accumulated of your country of origin, but the transfer of funds to your bank account here in Canada. We will also need the wire transfer. So you're going to have to typically, how you move money from one bank in a country of origin to a Canadian account is to wire it. Now, we do have to have a copy of that wire transfer as well. So please know that if you are moving money from out of country in, we also do have to have a copy of that wire transfer. So make sure that you do absolutely keep that as well. Now, this is something I do want to kind of stress to you. Keep it simple. We had a client the other day, and he literally had brought money in from overseas. He had taken it into his Canadian bank account, and he had dispersed it into 5 different accounts and had moved it to try and basically try and collect the new interest on the deposit. So he had it with 5 different banks. He moved it back and forth, typically every month, to try and maximize a very slight couple of dollars of interest. And it was absolutely impossible for the lender to track the money because it was moving every couple of weeks or every few weeks to a new bank account. Number one, this is very concerning to a bank. The fact that they can't track it is concerning. They would be worried on why people would do that. So keep it simple, bring it in, put it into a Canadian bank account, let it sit there for the 90 days, and we're good. Biggest question people ask me too on moving funds out is they hear a lot about these new great accounts, TFSAs and the FHSA, the First Home Savings Account. These are great programs. Absolutely use them. But know that we do have to track everything that goes not only for your First Home Savings account for 90 days, we have to track the source of all that money. So if you're bringing it into your savings account and then you're moving it out, we need to show the 90-day history of all the accounts that are affecting the money. Okay, so it can be a lot of paperwork. So the simpler you keep it, if we keep it down to maybe an account or two, it's really easy for you on the paperwork side to get us the documents quickly. So it's more an ease for you and an ease for the lender of the bank to go through and track it properly when we get there. Okay, so a couple of tips on all of those. We've talked a little bit about the income, we've talked about some down payment stuff, and we've talked about some credit support. Know that new to Canada is one of the biggest things that Andy and I do. We do deal with a lot of great new to Canada friends. We have dealt with these programs for many, many years. We know them very, very well, and we know how to navigate the landscape, the paperwork that you're going to need to get approvals very quickly to help you buy homes quickly and efficiently here in Canada. So you're dealing with a great team, and we look forward to helping you out. Again, each individual situation is so unique. Please reach out, click that booking link for us, and let's get your pre-approval started and talk to you one-on-one. All right, I'm going to pass it back to you, Andy, to keep on going.
Awesome. Great info, Ryan. I know it's a lot of information, but there's some great stuff in here. We've had some great questions coming in. There's a couple in here I wasn't quite able to answer, Ryan. So if you want to jump on that, I'll keep rocking. We got about 10 minutes till 8, so we might run a little bit over, but that's okay. I'm just going to get through the last little bit here. There's a little bit left on the financing here, and then I'm going to jump into a little bit of real estate stuff, and we'll get you guys out of here. So again, yeah, there's a booking link. Click on that link. Let us see how we can help you. We'll put it in some more as we go. But the last little mistake on the financing side is using your bank. Now, I don't have an issue with banks, right? I use my own bank. I use RBC myself just because it's conveniently here in Warman. My dad is the general manager of a credit union back in my small hometown. So, I mean, for me to come out and say don't use a bank is a lot for me. But there's a reason why. Like, there's nothing wrong with having your own bank. And if you want to go and talk to their mortgage advisors there, go ahead. But the smartest thing you can do is talk to Ryan, talk to a mortgage broker. They are going to help you a lot more than the bank can. Okay. So, and here's a couple things, a couple reasons why. Okay. So, Ryan, he's able to shop around your mortgage to like 30 different lenders, right? He can talk to the big banks. And he can also shop around different private lenders and things like that. So he can find you the best rate and the best program. Okay, that's huge when it comes to buying it. Like buying a home is a long-term investment. If we can save you, $50 to $100 a month or even $20 a month on a mortgage payment, stretched over 10 years, that's a lot of money that you could be losing just on interest. So that's why it's so huge to find a good product with a good rate. The banks are restricted to their in-house products. So RBC, Scotiabank, CIBC, they all have their own in-house product, and that's what they sell you, right? That's it. That's all. Ryan, again, he's going to work the same hours as I do. Real estate is an after-hours, weekends, evenings thing. You need somebody who's going to be answering questions for you while we're going through the process, myself included, right? If we're writing an offer on something and I need to know a little bit more about the financing side, for that's what's significant to you, I will reach out to Ryan, and 9 times out of 10, if not 9.5 times out of 10, Ryan's going to answer me right away. If not, it'll be within that time period, right? Like it's a bank will wait, and when they're closed, they're closed. You won't get a hold of them until the next day, all right? And even then, it's too late in this quick market. Like I said, he's going to offer you his best mortgage rate up front. Here's the best one. Here's how cheap you can get, right? This is everything. He's going to show you all the programs and the options. The bank, and he works for you and their best interest, right? Again, I'm going to stress this a lot. We work for you, not anybody else. We're here to make sure your money goes to a sound investment and not to somebody else's pocket, okay? Where again, the banks, they offer their bank posted rates, which can typically be a bit higher, and they are an employee of the bank. So as much as they say they're going to work for you, they also still have to make sure their employees are happy, okay? Their employers are satisfied, right? So a little bit of give and take there. And again, like I mentioned, you can call or text Ryan anytime with any questions you have on things. Try to get a hold of a bank. It is sometimes like pulling teeth. Now, not all the time, okay? Not every bank is just awful, but it's just what we run into, right? I've dealt with at one time Scotiabank, I've dealt with one time with TD, and just sometimes it's just communication is just frustrating, especially when you're trying to close a deal on a home that you desperately want. Okay. You want somebody on your side, and not just any mortgage broker now. Here's the other side of the coin. I work with Ryan a lot because Ryan knows what he's doing. I can submit an offer to Ryan, and unless there's some issues with job statements or things like that, Ryan can knock it out of the park. He can make things work. Ryan and I worked with a guy earlier this year in December. He was using a mortgage broker in Toronto that his friend referred him to. We literally tried to buy three different really good properties in Saskatoon, but the mortgage broker in Toronto kept talking them out of it because they just didn't know enough about the market here. They thought they were like this. They didn't know what they were doing here in Saskatchewan market or the Saskatoon market. They didn't know enough about Saskatoon, and they collapsed three deals on them. Finally, I said, okay, after the third one, we're talking to Ryan. I sent him to Ryan with the first property that we found. Once he got Ryan on board, we got him into it. They are happy. They love the place. So it's not just any broker too. You need somebody who knows the market, knows what they're doing, and can work with you on pretty much everything. So that's why this is so important. Okay. We're here again for you and to work with you. All right. That's the goal here. And then the last little thing on that is that bank penalties. When, usually we get a 25, 30-year mortgage, people typically don't stay in their first home for 25 or 30 years. Chances are they're going to upgrade eventually, bigger family, new job, more money, whatever the case may be. Most don't stay in their first house. So what you do is you sell it and you break your mortgage. Now, there can be a payout penalty. Ryan's going to try and get you little to no payout penalties if he can. Now, there's no guarantee there's no payout penalties, but banks can tend to have higher ones. Okay, so again, we're here to save you money. Just things to look out for when it comes to getting a mortgage. Okay, now I run a lot of stuff on financing. I'm going to jump over a little bit to the real estate. I'm going to kind of go through this a bit quicker, obviously, because we're almost at 8 o'clock here. So one of the mistakes from when it comes to buying a home now, new builds are becoming a lot more popular for first-time buyers just because of lack of resale inventory. New builds have become more popular. Now, the mistake some people make is buying directly from the builder. Much like going to the bank, they're there to sell their only product. At least using a realtor, using myself, I can shop you around different builders, show you what different builders offer, what's included, what's not included, who's a good builder, who's some to perhaps avoid, what different things they do with theirs, what contracts to watch out for. And as much as I say I'm going to help negotiate you, builders typically don't touch their purchase price because they have a whole block of houses and they're priced at, let's say, 450 or 500,000. If we drop $5,000 off their purchase price, each build after that is going to drop an additional $5,000 because we're all going to see that they've dropped price once. We're going to do the same thing. So they stand firm on their price. Now, things I can do for you to help you save some money is add in upgrades, right? Some don't come with appliances, so we're going to try and add in the appliances, add in a deck, add in, a garage package, a basement package, different upgrades in the house itself, an air conditioner, whatever they don't come with, right? Just an example is I may not be able to get the full appliance package put in, but I had a build that I'm just working on. They added appliances and an air conditioner, which is about a $17,000 value. I got it in for, I believe, 8. So I think I dropped like almost like it was about half the price, if not a little more, to get that in there. So to find appliances and an air conditioner for $8,000 is just unheard of, considering air conditioners are almost $7,000 to put in, right? So that's those things that I can help with. Get some additional items put in for you at a cheaper cost, okay? You don't save any money going towards a builder. You just lose a knowledge of different builders, different products, things like that. Okay, so that's why it's huge. I'm doing it on Friday. I'm taking a guy and we're chopping different new builds. Okay, so it's important to have somebody who knows what's going on and what to look for. Okay. Jumping ahead here. This is something I really like to talk about a lot as a home inspection. It's one of the most important things after a mortgage when it comes to buying a home. There is so much that goes into a home, so many working options, so many features. And there's so many things you can't see and know if it works. That's what a home inspection is for. Now, usually if I had more time, I'd ask you guys, but I'm just going to jump ahead here. the average price for a home inspection in Saskatoon right now for a detached house is about $475. Okay, that's with taxes. And I've had people say, well, that seems like a lot, but the amount of info you get on your home it's crazy. And not missing or missing something in the home inspection can cost you way more than $400, like a lot more. Okay. It's very important. Anything that's smaller than a detached house, that price goes down. But 475 is about it. If you're buying something with um, a basement suite, it can be a little higher, like an extra $50 charge to do the extra suite. But that's what it is. But this is essentially what you're going to get with it. They check everything. The guys that I use check everything, right? So on the left-hand side here, you can see that camera he's got. It's a thermal imaging camera. Home inspectors can't open up walls to look at things, but they can use cameras to look through it. They can tell you if there's the insulation is there. They can tell you if there's moisture issues. They can tell you if there's any heat loss or things like that that maybe is an issue to look at. On the right side, they're going to check your electrical to make sure there's no double taps or any issues with the electrical, which is a huge fire hazard if there is. They'll check your plumbing. So again, they'll check every single thing that has water running to it. He'll use his camera to see if there's any leak. On that one, he did find a leak. That's where that white or the blue line is in his little camera down there. That's water that he found. So we had them fix that. He'll open up the furnace and test the furnace because that's one of the major things in a house, especially in our cold Saskatchewan winters. So he's going to test all that, make sure it's functioning, make sure there's no issues. And then, of course, he's going to test all the appliances. So a disclaimer with appliances is they are a used product, so he will test them at the time of inspection. He'll let you know they're working, and they should be working when you take possession. But he cannot guarantee they're going to continue working a day or past possession day because appliances are a used product. They may not function. I've had people that came back a week into possession day and say their dishwasher's leaking. It was working and not leaking when we did the inspection. It was working and not leaking when we took possession. That's just an appliance. It's what they do. Okay. But they test everything in the house. They look at the exterior of the house. They test the roof, the foundation, the garage, everything about the house they check. It takes them hours to do, but it's worth every penny. And the thing with home inspections is if there's a major issue, whether it's mold, water leakage, whatever, you have the option of either walking away from the property to find something else, because that's a condition. We can negotiate money off the purchase price to help fix these things. We can get them to fix the things or negotiate that into it. Or, like I said, you can just walk away, right? Those are your options. Get them to fix it, knock off some money, or walk away. So that's what's so important about a home inspection is it helps you know about your property. They will give you maintenance tips on how to maintain your property properly and for a little funds, right? To make sure it just runs smoothly as you live in it. And of course, the cost of skipping one can be tens of thousands of dollars. If you don't get one and you find out the roof is leaking or the foundation has a major crack in it or there's water leaking into the basement, it's thousands of dollars to rectify. So spend that $400 and $500 and get them to check everything. It's so, so important. I even recommend people that are buying a brand new home to get a home inspection because builders are human too. People can miss things. It has happened. But the nice thing is you'll pay for the home inspection. Whatever he finds wrong, you just go to the builder because you've got a year's worth of warranty and say, fix this stuff. And they'll go in and fix it for you. So that's the benefit of that. That's why that's so important. But yeah, that's about, I can go on for home inspections for a while, but again, that's just what they're so important about. The last little bit is another inspection, but that's if you're buying a condo. If you're buying a condo, that's mandatory that you have a copy of the condo documents, which is called an estoppel package. Every condo has one. It tells you how much they have in savings, so the reserve fund, in case they have to fix anything in the property. It has maintenance funds. It has how much your condo fees are, what they cover, where each part of the condo fee goes to, the bylaws that are in place, so what you can and can't do with it, any pet restrictions, things like that. It's just a whole mess of it. They'll tell you who does the maintenance, who has insurance on the place, what they need to fix, what their reserve fund study is, right? There's so much that goes into this. So what isn't mandatory is you getting a lawyer to look at this. but you're paying for a lawyer to do the transaction. Get them to look at this. It doesn't, if doesn't really cost you anything extra. Some may charge you an extra fee like $50. Some might not even, they'll just include it in the purchase, right? But it's very important because I've had a few times where a lawyer says, nope, do not buy this property. You're going to get a cash call, or they haven't been audited very well. And there's going to be a huge increase of condo fees, right? We want to make sure that you are aware of that. A cash call is if they don't have enough money to fix a problem and they come to each unit owner and ask them to chip in even more money to help fix it. So on top of your condo fees, it could be a couple $100, could be thousands of dollars. So that's why it's important to have a lawyer review this to make sure that you know that it's being run properly and that you don't have any worries of a cash call coming. And the other thing is for renovations too. Some condos have renovation restrictions, so we don't want you to go in there, start ripping out things, put in new stuff, and then find out after that you can't do that. And then you get fined potentially, and then have to rip it out and redo it again. So this is very important to get it reviewed, know what's in it. And again, it could cost you thousands of dollars if there's cash calls or increase of condo fees or bylaws in place for renovations. Okay, so very, very, very important to have this reviewed by a lawyer. It'll save you so much money. That's the whole point of this whole thing, is to save you money when it comes to buying your first property. It's a huge investment. So let's make sure you are getting every penny out of this. Okay. So yeah, we're a bit, I kind of got there. That's kind of it. I know we rushed through a little bit of the last part, but it kind of gives you an idea. Again, this is just a starting point. Reach out to us, book that call with us. I'm going to put it in here again, just so everybody has it. Book that call with us, and we'll talk with you more about this. Even if it's just more questions on this whole thing, we're happy to help. But this is essentially, I guess, sorry, I should ask you, is hopefully you guys are feeling a little bit better about this. I know it's just the first steps. There's a lot more going into it. But Ryan and Ari's goal for first-time buyers especially is to literally walk you through from start to finish so you know exactly what is going on, what needs to be done, and how we protect you. I will be the first to tell you when we walk into a house, if I don't think it's worth the money or it's going to be a bad investment, I will be the first to tell you that. Even if we step in the door, I look around and in 3 seconds we're like, nope, we're out of here. I've done that before. We just need to know that you're protected and that we're not just going to put you in any home that we find. It's the right one. Okay. That's the biggest thing about it. When you do book a call, this is what it looks like. It's going to bring up a calendar and it'll have spaces available and times. Just find one that works for you. It'll put it into my calendar. I'll make sure there's time available that we have a one-on-one talk with us just to get the initial start. If you want to go further, then you have our numbers. You can call or text anytime. But yeah, that's essentially it. I hope you guys got some value out of this. We are going to stick around, for 15, 20 minutes if you guys want, or however long you've got questions. This is the time to ask anything about the market, ask anything about this, ask anything you want, throw it out there. We're happy to answer. Just really quick, I did see one about the home inspection because we were just on this. How much would it cost to get the home inspection done, or is it part of the package? No, it is about $475 for the inspection. That's out of your end, because that is even though I believe it should be mandatory to get one, that is a choice for you. It is your call to get one done, even though I don't agree with not getting one done, but that is something that you cover. You're hiring the inspector, you get the report. That's how that works. All right. So, but it's worth every penny. Now that I've gone through everything, Ryan, we missed things. We got more questions to go over.
No, I think we've had some absolutely fantastic. I mean, congratulations, you guys. I mean, you kept us on our toes tonight. This is great. So we've got some absolutely great questions from everything. I mean, I think we do have a few great new to Canada friends that are going to qualify, Andy. I think we've got some great new to Canada questions. Lots on income stuff on the new to Canada side, which we have covered. A couple of questions on what sort of status they must have. So pretty much you do have to be a Canadian citizen here on a permanent residency status or here on a work permit that has a minimum of 183 days left on it to qualify for mortgages here in Canada. So that's kind of the requirement. We do have some rules in place for non-Canadian borrowers that have come into effect in Canada here. So those are the three things that we do need. Either you have to be a Canadian citizen, you have to be here on a PR status, or you do have to be here on a valid work permit. A brand new question here from Ola Kunle. Thank you so much. What are the pros and cons of a detached or a no detached garage on homes? I'll leave that to my resident realtor pro to answer that one.
I love that question. I get that question so often. Usually it's a lot of times when we're dealing with new builds, because a lot of new builds will either come with one or the other. Most houses do, right? So, um, really, I don't really have an issue with either. Honestly, myself, my house, I have a detached garage in the back. I go off my deck, down, walk a few feet, and I'm into my garage. It's insulated, but it's not heated. But in like even if it hits minus 30 or 40, the inside of the garage is only still minus 10. So if I want to put a heater in there, I can, but it still keeps the cars out of the element. Sure, the con of having a detached garage is if you park in there, yeah, you got to walk a couple feet outside and into your house, which, is it a big deal? I don't find it's a big deal. And of course, an attached garage, you can literally drive in and you're right inside your house. And you don't have to worry about it. And you do get a little bit of extra heat because you are attached to the house. You get a little extra heat from the house in there. Um, and of course, it adds a little bit of value to the house because, an attached garage increases the value than a detached garage. But I've had many people looking at new builds and some actually go to the detached route because it is a little bit cheaper of an option, but you still get a garage. You can still have it heated and insulated. You just got to walk a foot or two or a couple feet in the outside. But I don't, it's kind of more of a personal preference, I guess, really. The attached garage, it will come with a driveway. So that would be the con, I guess, of an attached garage is now you have a big driveway to shovel in the middle of winter. All right. So we do require, or not require, but we do recommend you invest in a snow blower. And me having a detached garage, I just have to shovel a lane of snow in the wintertime to keep us walking through there. But I'm sure Ryan can shed light on what happens in our Canadian winters for his driveway, right? So that's essentially it's kind of preference, really. That's all that comes down to.
Yeah, that's a great point, Andy. I mean, I've actually had both. Our first house, we lived over in Pacific Heights, over on the west side of Saskatoon, and we had a bungalow that had a detached garage that was set back. It was insulated, so it was great, but it wasn't heated, so it was insulated, but it worked great. It keeps the snow off the car and really keeps it safe. It keeps it safe typically for, from anybody that's maybe looking at walking around and breaking into the car. So there are some benefits to that as well. I would say having a detached garage is better than having no garage.
Mhm.
My wife would say she loves the fact that she can put on a light jacket and jump in the car. We have an attached garage now. She jumps in and she has a parking lot at work, so she jumps in with a light jacket even in the winter. So I mean, we love our attached garage, but again, really personal preference. I would say having a detached garage is better than having none, and having attached garage might be slightly better for value and personal preference than maybe something that's detached. So, but there's definitely pros and cons to both.
Oh, we got another one. So we got apart from 5% down payment, our taxes, lawyer fees, and other miscellaneous fees will be out-of-pocket expenses, or can be part of the mortgage amount. Now, that's kind of both of us, but I'm going to say, there for sure are other fees and out-of-pocket expenses. I'll let Ryan touch on the mortgage one, even though I'm pretty sure we can't. But yeah, you have the lawyer fees, which are the closing costs. So, mortgage fees, title transfer fees, mortgage processing fees. There could be utility setup charges if you don't have any utilities set up yet, moving expenses if you choose to get a mover. But I'm sure Ryan can tell us that no, we cannot finance that into it unless there's a change, but I don't believe we can.
You are absolutely correct there, Andy. So typically the fees on the mortgage side, I mean, the 5% down payment, obviously has to come from your own sources or a gift, as we've talked about the down payment side. As far as the lawyer's fees, what we typically approximate, Rodson, that's a great question, is 1.5% of the purchase price of the home And what that typically does is covers the lawyer to do his work. So it covers his time. And what he typically has to do is go through and register the mortgage paperwork and register that mortgage onto the title of the home. And there is a cost with land titles to do that. So what we usually say with the land title registration costs and the lawyer doing his work, it's about 1.5% of the purchase price of the home. Lawyers' fees, of course, cannot be capitalized into the mortgage. Now, the one other fee that I do get asked about when people do see it on the commitment is the CMHC, the mortgage default insurance fees. So if you are using a down payment of under 20%, in Canada, you are required by law to have that mortgage insured by CMHC. They are the Canadian Mortgage and Housing Corporation. It covers the bank for the lower down payment. So it covers the risk. And it is an insurance that does have to be paid. It is required by mortgage law. So any down payment under 20% must be insured by CMHC, and there is a fee to do that. There is a premium to do that. And that premium absolutely can be included in the mortgage. It typically is. So if you have a down payment of 5%, you would also have CMHC insurance defaulted costs on that. That would be completely capitalized, included in the total price of your mortgage. So that is the one fee that is included in your mortgage. The lawyer's fees, your home inspections, any hookups, things like that, those would have to be paid out of pocket. Hopefully that answers your question. Another question here from Ron. So will there always be a reservation fee when looking or confirming a property? I'm assuming that when you're writing an offer, you may be referring to the deposit. I'll let Andy kind of cover that. If you are talking about the deposit, I'll let kind of Andy handle that. If that doesn't answer your question, please let us know. Okay, Rodson?
Yeah, like so when looking at a property, we don't put anything down, right? There's no money to be transferred. But every property we offer on, when we get an accepted offer, we have to put a deposit down. Now, the deposit comes out of your down payment. It's part of the down payment, so it's not additional funds. Um, so what that means is the deposit goes down to show good faith that you're wanting to purchase this property, because you could go around with no deposit and just put offers on property and then walk away and you're not going to be out any money. So we have to show good faith that you are committed to going forward with this property, right? Obviously, if you like the property enough, that's not going to, I've never had anybody have an issue with a deposit, right? Again, it's part of it. So you put the deposit down. If we're going through the condition period, so financing, home inspection, as condo review, whatever, if one of the conditions isn't satisfied by you and you choose to walk away from the property, that's fine. Your deposit either gets returned to you or we just simply haven't submitted it yet. That's fine. It's when we remove conditions and you are satisfied with the house, everything's come back fine, good financing, good inspections, all that, and you're happy. It's in between that and possession date that if you choose to not proceed with the purchase, maybe your financing falls through, because we've personally haven't had, well, I haven't personally had it happen yet. Anybody that Ryan and I have worked with hasn't happened yet. But if you go out and let's say finance a new car, furniture, and it wrecks your financing where they can't fund you the money anymore, and you lose the house because the financing isn't approved anymore, then you lose your deposit to the sellers. That's how that works. But as my career, I've never had anybody lose their deposit. Anybody that Ryan and I have worked together from first-time home buyers haven't lost their deposit. We do everything we can to inform you on how that works. But that is how a deposit works. Again, we can go through that during an offer, but you don't ever put any money up front until we have an accepted offer and we at least have some conditions rolling through. Hopefully that answers. Hopefully that's what you were looking for. And so I see there's a down payment of 7% instead of 5%. You can put absolutely any kind of down payment you want, as long as it's that minimum 5%. If you want to put 5.5, 6, you want to put a lump sum of, 40 grand down, you can put whatever you want down. It just has to be the minimum 5. It doesn't matter. It's your preference, right? Oh, this next one from From Ahmed there, how to do a down payment in a way to save tax on the amount we are paying as a down payment. I know this is about FHSA. That's a definitely one for, I guess, you, Ryan.
I think what you're referring to, Ahmed, is how to be able to claim it on your tax return. And the first home savings account is one way to do that. RSPs were kind of the original one way of doing that. So what happens with RSPs, we have a program in the with the government, that allows that any funds that are used for down payment can be written off or can be claimed against your taxes when you file your RSPs. So RSPs, of course, if you put funds into RSPs, you do get that tax break back. So it's not so much that the down payment itself is tax free, but the RSP, when you file and put your funds into an RSP at the bank, you would get a tax slip that you can remove that off of your income and use that as a deduction. The first home savings account works exactly the same way. When you put funds into the first home savings account, you will get a tax slip that the funds that you put in there can be deducted and written off when you do your taxes. So those are kind of the two tax breaks. Now, the backside of that is when you use it for down payment, you of course do have to redeem those funds back out of your RSP or your first home savings account. Now, what typically happens is you can pull them out tax free, but there is repayment requirements on those accounts that you do repay those funds back into your RSP or your first home savings account. Usually it's with the RSPs, it's done on 1/15th. So it's a 15-year repayment on whatever you pull out. So for example, if you pull out $15,000, you would have to put back in each year $1,000 minimum back into your RSP to keep that tax-free status going. Okay, so make sure that you do check with your RSP or your first home savings provider. Usually it's a bank or an investment company. Check and see what the rules are on when you pull those funds out, what the requirements are to keep your tax-free status when you put them back in. But the tax-free portion is actually when you invest in the RSP. So when you take $15,000, you put it into the RSP or the first home savings account, that's when you'll get your tax slip that you can write it off on your next year's taxes. Now, to keep that tax free when you do pull the funds out, check with your bank. But usually there's a repayment portion that you will have to pay back. Usually it's 1/15th over a 15-year span. You'll have to pay back 1/15th every year for 15 years minimum to keep that tax free portion of your RSP or your first home savings account active. Hopefully that answered your question. But those are the two: first home savings account and RSPs.
Yeah, we got another one for you too here. What's the current average mortgage interest rate? Always a hot question, eh?
That's a great. I was wondering when that was going to come out.
Yeah.
You know what we mortgage rates are dependent on so many factors, Ross, and we would I would not quote a number out here because every situation is different. It really depends on if you're using CMHC, if you're going non-CMHC, if you are buying a rental property. If you're buying an owner occupied property, those rates change. If you're using a 3-year fixed versus a 5-year fixed versus a 5-year variable, those are all different rates and all have different requirements on them. So what I would recommend is let's you and I have a talk. Let's find out exactly what your situation looks like. Let's go through that pre-approval process. We'll kind of fine tune the process. You and I will have a great talk on what sort of a term you're comfortable with. Do you like that fixed? Are you really looking for something that's a little more secure, maybe in a 3 or 5-year fixed? Are you maybe a little more, risk affluent and are okay with a variable, knowing what rates are doing? Rates are starting to slowly come down with the Bank of Canada. Those affect the variable rates. So those have come down over the last few months. And really the variable rate is starting to look a lot more attractive now. So you and I will have a really good conversation on where your risk tolerance is. We'll talk a little bit about the market and we'll find, a term that really works good for you and we'll get you the best rates on the market. No problem. Hopefully that answers your question.
Yeah. Great. Yeah, we're if you guys any more questions, throw them out. We got a couple more minutes. If not, yeah, if it's kind of answered most of it for now, great. Again, I appreciate everybody who's booked to call with us. I look forward to talking to everybody, um, going over everything. For anybody, I'll put it in one more time here for you guys. Feel free, again, this is free. This is just advice. This is more info. It's, we're not here to, sell you to like buy right now. It's no, it's just book a call. We can go over everything. It's casual. We're not here to push you on anything. So go ahead, book that call with us. No, that's fine. Keep the questions coming. Down payments must be an account for 90 days. Suppose if I need 30,000 as a down payment, I only have 20,000 in my account and the rest 10,000. Can I save in the next few months until I get possession? Oh, that's yeah,
That's a great question.
it
I'll
is.
jump in and answer this one here, Ahmed. That's a great question. So what we typically do, so down payment doesn't have to be in the account for the full 90 days. What they do is they look at your account for 90 days just to make sure that you haven't gone and taken out a bank loan or anything for the difference, because that's a no-no. Don't do that. It does have to be saved or come from your own resources or a gift. So suppose you needed $30,000 as a down payment and you only have 20,000 in your account. The 10,000 would have to be saved up by the time you write your offer. Okay, so it's not by possession. We do want those funds because we do have a window that we have to have your down payment condition approved to firm up your condition on the sale. So we do have to have the full down payment in there when you write your offer, not at time of possession. So it's a little bit of a clarification there. So if you have 20,000 and you plan on saving the other $10,000, save it up before you write your offer. As long as the full amount is in there and saved up before you write your offer, we're good to go. That full amount doesn't have to be in there for the full 90 days. They just want to see the accumulation and check that account to make sure that that 10,000 was saved along that timeline in that 3 months. So, but it does have to be in by the time you write the offer, not by possession. Now, I do want to make one little clarification on there as well. Also, we do have to show the closing costs on the home in addition to the down payment. So the lender is going to want to know that you can pay the lawyer. Okay, so the lawyer's fees again are typically approximately 1.5% of the purchase price of the home. So, for example, if you're looking at a $300,000 home, you would need a minimum of $15,000 for the down payment portion. You would also need $4,500 for the legal lawyer's costs. So you would have to show the bank a total of 19,500. Okay, so we do have to show the bank not only the down payment, we do have to show them that closing cost amount. That 1.5 is also in the account ready. Okay, so make sure you do have both. So if your down payment is 30,000 that you need, for example, you're probably looking maybe at 10% on a $300,000 home or 5% on a $600,000 home. Make sure you factor in also those closing cost amounts to pay the lawyer. That would be on top of the 30,000 that you would have to save up. So hopefully that makes sense.
Perfect. Well, again, I appreciate that. Thanks for all the questions. Thanks for everybody sticking out for the end here. We always appreciate it. Again, I'm going to put it one more time. Oh yeah, keep the questions coming. Can I take some part of the down payment from my line of credit and put it in a main account? That would be more like borrowing too.
Yeah, it's called yeah, that's a great question, Ahmed. It's called a borrowed down payment. It is allowable, but you have to, number one, they want to know that you have excellent, strong, long-term credit. So if your credit is fairly new, you cannot borrow. Typically, what they look at is usually about 4 or 5 years worth of very strong, no missed payments, perfect credit for usually 4 or 5 years. And then you can borrow a portion of that down payment. What you also do have to factor in is if you borrow that off your line of credit, you're going to have a minimum payment that you'll also have to factor in on that line of credit. So, for example, if you borrow $10,000 off your line of credit, most line of credits or credit cards have a repayment of 3% that is required. So we would have to factor in a 3% payment on your qualification ratios as well. So that might affect what you can borrow. So a couple of things you do need to borrow there. You have to have good long-term, very strong credit, and we do have to factor in what the payment would be on those borrowed funds. But borrowed down payment is sometimes an option. It said if you're brand new to Canada, it's not. Usually you have to be here for a while, have good long-term, really long-term credit. But it is an option for those people that do meet their requirements. Credit cards are the same. Yeah, anything borrowed. Loan, credit card, line of credit, all the same. Yeah, typically most people don't borrow off a line of credit because your line of credit is likely about 19%. Um, and you're going to pay way more in the fees to borrow that money as you just, save it up, take the time, save it up properly, and don't worry about paying the absolute crazy credit card or line of credit fees on that. Not a good way to go. Yeah, take the extra couple of months and save it up. Then you don't have to worry about paying off a $10,000 or $20,000 line of credit and making the minimum payments on that credit card.
Perfect. Awesome. Well, again, yeah, appreciate everything. Appreciate you guys.
You're
So for
very
everybody
welcome.
who's still with us here, again, I'm gonna send out the recording of this. Again, with a booking link, the free stuff I promised before. Check your inboxes tomorrow, probably in the afternoon. If you guys don't see it and it's not in your junk folder, reach out to me. I'll get it to you directly. A lot of the times I've had people say it never did show up for some weird reason, but I'll get that all out to you guys. So if you want to recap all this, go ahead. But again, thanks for your evening. Appreciate you guys sticking around. Uh, Book that call with us if you haven't already. And if not, I look forward to talking to the rest of you and everybody again. So, but thanks again, you guys. If you guys have kids and are taking them out tomorrow night, I hope you guys have a fun and safe evening with that too.
Happy Halloween, everybody. Thanks for joining. We look forward to chatting with you all real soon.
All right, take care, everyone.